So it looks like we have a clear pattern emerging on the S&P 500. In this video, I show you exactly what that is, what the target prices are for the S&P 500, and potentially where the stock market could go in the coming 2 to 3 months. Hello everyone, this is Sajad. I hope you're doing well. So as promised, a midweek update on the S&P 500, some very interesting price action. Just before that, what could be pushing the markets lower at the moment? Well, in Europe, as discussed in my previous video, there are definitely concerns with regards to the pandemic, and new modeling shows in the UK is on course for prolonged second peak. Obviously, we're going into winter as well. I'm still of the opinion that I think at some stage in the next few weeks, we might have a full lockdown, which they'll call a circuit breaker, but I think it's just going to extend until the actual statistics improve. That's what I feel is coming. I mean, we may manage with the tier system alone, but anyway, that's what I think is going on at the moment. Now, because this is an issue in the EU, European markets aren't doing so great at the moment. In fact, I can show you that on the chart right here. So the Stoxx 50. So this is 50 of the largest stocks in Europe. You can see there clear break and a fall. Now this is important because we haven't seen movement like this accelerating probably since the actual initial crash back in February. So you saw how impulsive that move was. We had a move back up to the 5th of June, 8th of June here. And since the US stocks have actually been rallying further, so especially the Nasdaq, Dow Jones and the S&P 500, what we've seen in the Stoxx 50 sideways movement ever since, which is now actually breaking. I mean, it's possible this may have just been a large kind of triangle sideways here, but we've seen a clear break, and this is the most impulsive price action we've actually seen. Now, given the environment and given what was actually happening in the lead up to the February crash, so all of the closures, the potential long-term implications, we're kind of in a similar situation here as we are here. But it's important not to get caught out here because the environment is actually different in a way. Yes, there's been some real truths now in terms of the future, for example, of the airline industry. We had the chief executive of Heathrow speaking this morning. I saw that on the news, and he's not expecting any sort of massive recovery for at least another couple of years. So the magnitude of what's happening is sinking in right now. But remember, we've got better resources to cope with the pandemic as compared to the sudden surprise we saw in February. So it's important to note that also. In the US, what news have we heard? So hedge funds that plan for US election chaos see a blue wave, basically meaning comfortable Biden victory and the Democrats also taking over the Senate. Now, in terms of the magnitude of recent drops, Europe stocks are tumbling to a 5-month low. But also they talk about the VIX here, so we'll discuss that in just a minute, and also oil. I'm going to do a separate video on oil because we're finally getting that move that we've been waiting for down, and it could be just in the early stages. So let's get on to the charts now. I want to have a look at the VIX first. So VIX is up a massive 14% today, so you can just see that here. It'll be interesting here just in terms of classic analysis. If you have a look at the trend here, you can see here after that peak we had lower high, and now if we turn back down, it'll be another lower high. But will it actually be so, or will we get more accelerated selling in the coming kind of week or so? Will we break above here, which will kind of almost break that downtrend we have in place? That will be technically quite important on the VIX. And with the VIX, anytime it shoots up in general, not always, but in general, when the VIX goes up, you do see stocks go in the opposite direction. Now, these are the normal levels that I've actually marked off here. This is looking historically back at how the VIX has performed in the last 20, 30 years or so, especially the crash and recession we had in 07, 08, and then going into 2009. And you can see briefly in August we were here within normal limits, but we're back above now. So the VIX is not completely settled. Now let's get onto the S&P 500 because I think the move is now confirmed. And by the way, if you're enjoying the videos and the updates, please click the like button and comment below. I really appreciate the support I'm getting here on YouTube. Now this pattern, I discussed it in the last video where I'm talking about a possible Christmas rally, but to wait 2 weeks before you buy because it was going to take a couple of weeks for this pattern to play out and correct downwards. Now, if you didn't catch that video, I'll link it in the top right now so you can have a look at that first. And that discusses a few different scenarios. Now, what we're looking at here, as I discussed in that video, the most likely is a flat correction. And what happens with the flat correction, just to explain, is we get an impulse move up and then price corrects itself like this, move down, back up almost to the same level, and then back down again. So this is what is known as a flat correction. And some examples you can consider, I mean, there are different ways to even view this move here, but you could call this a typical flat correction. You could possibly call this correction here almost like a running correction. That's one way you could have looked at that. So we tend to get expanded flats, regular flats, or running flats. Now here, because of where we stopped, it can't obviously be an expanded flat, but you can still get a running flat. And in that scenario, what basically happens, let me just remove the drawings. In that scenario, we basically get a classic 3 waves down, which likely we had seen there. So 3 waves back up almost to the same level, and then a 5-wave move down here. In a running flat, we never reach that previous price low, so that wave A low. So this low here, which is at 32.10, we never reach that. We just turn and price moves up. In a regular flat, you expect price to break below here. So break below this level. Let me just draw that on here. Break below, so price will move down in 5 waves. So something like this, 1, 2, 3, 4, 5, break below, and then we'll see a next leg up, because that will be the end of the correction potentially. So those are the 2 things I'm looking at. And for this to play out, this has to be a 5-wave move down. Now, the tricky part is this could also be a WXY correction. So again, kind of like a flat correction, but a little bit more complex. And the problem with WXY corrections is they can go on for a little bit longer. Obviously, we've got an election looming in a few days as well. One thing you just have to be careful with is the stock market can catch everybody out again, because yes, we know what's going on in Europe and we're expecting a correction down. But then if a lot of people are assuming that's the big correction in the stock market and this is the next crash that's ensuing, which is still possible, and I'll discuss that in a minute. If that's what's ensuing here, they're not going to expect next week after the election for there to be a rally into December. Now that's what I think could potentially happen before we see the real crash. Again, I don't know for sure. I don't have a crystal ball. It's just something I'm considering at the moment as per my previous video. So before we discuss one other alternative, which is even more bearish that could be playing out here, let's discuss price targets. So let me remove the drawings again. And just to summarize as well, if it is an ABC, what I'm looking for is just a C wave here. So a break below 3210 with an immediate move back up. So we go a little bit lower and then we correct back up. So that's what I'm looking at. And the problem with the running flat is that is possible. You can't 100% rule it out. But the problem with that is that usually the B wave would move ahead of the start point of the A wave. So this top here, price should have gone higher first and then a 5-wave move. So a running flat like this, so ABC, is less likely. Let me just draw that on. So this, I think, is less likely what's going on here, with that A wave being down here. What I think is more likely is this, so more like a regular flat. Now there is one other alternative. There is one other thing as well here we have to be aware of. So if this is a 4th wave, which I discussed in the previous video, another possibility here is a triangle. So a triangle would be move down in 3 waves, up in 3, down in 3, up, and then one more down that usually doesn't reach that bottom trend line, and then we move up from there after. So that's possible. So these are I would say these 2 are the main ones I'm looking at if we're going to see a reversal in the next few days or next week or so, and then we get a final rally up. That's what I'm looking at. So I'm going to drop down now onto an hourly chart because I want to have a look at this entire move from this high we saw at 3551 on the S&P futures. Now labeling this is not easy, but you have to say with this recent acceleration, this feels more like a 3rd wave. So it's possible that we saw an end of a 2 there, a 1 here. So this could be in an overlapping 1, 2, and now we're seeing the 1st and 2nd wave and the 3rd of the 3rd ensuing right now. So the important levels we need to know about, first of all, is the previous low here at 3210. That's key. But also if we take an extension here, And I'm just zooming into the chart a little bit further. So if that is indeed the third wave that's playing out now, you'd expect it to extend. So very likely first target there would be 3248. And then for the entire 5-wave move, I'd be looking at around the 3160 level. Now, the other thing we need to do when we're looking at these extensions is we need to look left to see what price action has done previously and where there may be some other key levels. We know this one's very important because this was very close to the previous June high. But are there any other levels before that that we need to be aware of? There's another level here you can see as support. So the 3300 level. That would be another level for us to be very aware of. Very likely that price could find some support there first and take a pause. So I've marked that in as well. And I've marked in the 3210 level there. Now the problem with this move, the issue we have is, like I said in the last video, this did look like a 3-wave move up, which is now very likely to be confirming. The other thing you don't know though is, as I've been saying in the last few videos, we can't say for sure that we didn't see a top right here that a lot of people aren't really expecting at the beginning of September. But you have to say, because of the environment at the moment and we're getting accelerating cases regards to the pandemic, that could be a top there. We know the economy is looking dire for the next couple of years. GDP is going to be, I think smashed again for the early part of 2021. I don't think there's any doubt about that. So looking at this as a 1-2 is also possible as an overlapping 1 and a 2. And you certainly can't rule that out. Now, it was a very deep retracement for a wave 2, but remember, you can't rule it out. Now, this is very bearish. In this scenario, we could be at the beginning stages of a wave 3 that takes price down a lot further. And then we're going to have a 4 and a 5, and then correction, and then a further move down. Now, that could be ensuing as well. If that is playing out here, well, then in the next 2 or 3 months, price could be a lot lower. It could be all the way down to the 2700 level literally within a month and a half, because we've seen here on the S&P 500 over the last few months, any price corrections tend to be quite severe and quite sharp as compared to increases in price. So something to watch out for there. So what am I looking for here? Well, after this move down, what I'm looking for here is, if it's the first scenario playing out, this is a massive flat, somewhere in this level, I'm looking for some hammer candles there and for support to be found. Then maybe some good news, who knows, some stimulus news or something else like that, or that things aren't as bad as they were expecting, or some clarification with regards to the US election, a clear majority one way or the other, even before, every single vote is counted. And that might result in a little bit of stability. And then what I'm looking for is actually, if that happens, again, we don't know for sure, but if that happens, one final impulsive leg up, possibly to the S&P 500 to the 4,000 level. Now, this is assuming all of this was an impulse wave, which I wasn't actually considering, if I'm honest, 2-3 months ago. I'm only considering it now, given on the S&P 500 how far we've actually moved up and the way price action is behaving at the moment. But the other way to obviously look at this is a massive correction up, a massive WXY move that's actually, again, just completed here at the beginning of September top. And by the way, just to be clear, when I'm talking about a full correction here, you're probably wondering, well, how can it move up so much? Well, it can do in a complex sideways correction or an expanded flat. You can see that. So the reason I think this could still be all a correction is because, again, if you go back to the Stoxx 50 in Europe, that is exactly what's happened here. So we had that crash, then we've had this correction up. This is all corrective price action, and now very likely we're seeing a continuation of what began initially at the end of February. That's what's playing out right now, and that's why even on the S&P, despite how high price has gone, it could have all been corrective. So remember, this is just futures trading. The US market hasn't quite opened as yet. Let me know what you think in the comment section below. I'll try and do another update again in a few days. Thank you very much for listening.